The first panel is also trust-based, but we'll segue to the VC part of this, and also very important sector. Trust-driven crypto VC strategies, reigniting the industry and fueling Web3 innovation. Our speakers will be Jocelyn, head of DCG Expeditions, Neil, head of EMEA Fintech, Softbank Vision Fund, Alain, Fabric Ventures, Silk Venture Partner, CSO, and our moderator, Paul, head of Accelerator for Cointelegraph. Please, a warm round of applause to kick this conference off, and welcome the speakers to the stage.
Hi, everyone. Hi. I hope you had a very productive day yesterday at the conference and also enjoyed your evening yesterday. And thanks very much for being here that early. I know it's an effort. And thanks very much to our panelists. Thanks, Megan, for introducing us. And our topic for today is trust-driven crypto VC strategies, reigniting the industries and fueling the innovation. And I wanted to start with like a very broad general question. So what's actually happening in the crypto VC space is that we've seen a decrease in the overall amount of investments and the funds flown down to somewhat around $2 billion for Q1. We don't have the Q2 number yet, but I would expect it to be somewhat similar. So what's your take on the overall change in the sentiment? How you see what has changed, and most importantly, what, in your opinion, can invigorate the industry and move it back to the rising rails? Anyone wants to start? Alain, please.
Yes. Good morning. Good morning, everyone. Kudos for all of you being here at this early in the morning. I think the short answer to that question, what has changed, that it is a bear market. And there has been bear markets in other industries. There will be bear markets again, and we are in a typical cycle where in a bear market there are less investments. So I'm stating the obvious here, but I think it's quite important because the level of investment we're seeing now in Q1 of this year, which is still quite significant. I think this is like more than $2 billion of investment across more than 300 companies. It's higher than it was in 2020. And if you compare to the sort of the post-ICO debacle of 2017-18, we are already at a much higher level. So sort of on an algorithmic scale, I think the trend is still very much up, but it's a bear market, no doubt about it. What can we do to reinvigorate? And I'm sure we're going to talk more about the trust issue in a second. But I see today, sitting as an investor with Fabric Ventures, we see a lot of activity, and we see a lot of activity in terms of companies being created. Projects being developed, companies that we are incubating through our Fabric X program, whereby we actually come up with ideas and match them with competent technical teams. So we've done 25 projects in the space of a year, 5 of which are already at the stage of the next stage being funded by other funds as well. So to me, I don't observe from where I'm sitting like a slowdown of activity at all. It's no different than last year, than 2021. It's the same. It's not more, but it's the same. So there is some confidence issue in the wider market, the wider public, which we could address. But right now, institutions get into the space. I think a lot of venture groups are seeing the same level of activities as before. So I'm not particularly pessimistic about what's going on right now, but it's a bear market.
No, that's great. So basically, we're kind of a pass-through portion of a bubble, and then but the trend is still going up, and there is much more developers activity and startups activities in general. And even though the absolute number as compared to the previous year may be lower, but the overall trend is going up. Is that what you're saying?
Yes.
Okay, yeah, I love it. That's great. Jocelyn, do you have a take on that?
Yeah, and I think focusing specifically on the early stage, so for some context, I'm a pre-seed and seed investor in fintech and crypto, so we focus on the earliest stages. If you look just at the early stage data, it has definitely gone down. So last year in March, April, there was 170 deals, early stage deals, being announced per month in crypto. That went way down post-FTX. It was at like 70 in November. And then, kind of stayed slow for the beginning of Q1. And now we're back at 2/3 of that previous peak. So now we're back at like 120 deals per month announced. So I do think that, we are maybe slow recovery, but we are kind of we're not at the bottom, right? So I do think in terms of early stage activity, it is picking up, although not quite at the peak as before. And I do agree with what Alain says. Investors are still very interested. We're still deploying actively. We still see a lot of activity in the market, but the difference is, unlike previous years, rounds are slower to get done. There's more diligence applied. There's perhaps a little bit more of a higher bar. So we do see, and we think that's rational, quite frankly. Valuations, of course, have also come down. So we think that, again, it's more of a rational market, but there is more of a pickup in the future.
Okay, that's great. And it's good to hear that there is traction in early stages. But let's get more to like the heavyweight side. So Neil, maybe you could comment on your side.
Yeah, absolutely. Look, pleasure to be here. Look, I think I'll represent a lot of very different commentary, perhaps, given that I focus much later stage in my investing practice. Effectively, we look to invest about $50 to $150 million first check into a company. So that's a very, very different end of the spectrum from the perspective you just heard. And where I sit, there's still a lot of opportunity out there. There are a lot of companies still raising and looking to raise capital. I think a lot of investors at the later stages, however, are in wait-and-see mode. I think what we would need to see is traction, metrics, adoption really improve. And we had that initial growth spurt. There will be another growth spurt in terms of adoption in other platforms. But I think at the same time, a lot of later stage companies raised quite a lot of capital. And I think there's a lot of time that's just needed sometimes to actually implement some of the strategies that we're going to use that capital for, deploy some of that capital into new areas, spend time building, and then see through it to the next foundation for this space. Where we do see some activity, and so this is a little bit less on the investment side for us, we see activity in two areas. One, M&A. I think there are a lot of early stage projects that sometimes are not now, unfortunately, in the bear market, able to raise that next round, but they are great teams, great projects. Some of our portfolio companies are actually looking to acquire some of those early projects, right? Because I think there's a great roll-up opportunity. There's a great opportunity for a lot of these projects and teams to come together and build something together from different perspectives, but build a greater whole. The second area of activity that we really see is beyond M&A, it's on the regulatory side. And I know we're going to touch on regulatory topics in a few minutes here, but I think we're increasingly encouraged to see more and more regulatory clarity given around the world, different geographies, Middle East, East Asia, and so on and so forth. And I think what regulatory clarity allows is it gives more consumers, more traditional institutions confidence to spend time and participate in this ecosystem. I think with that confidence, with more time being spent, more activity, more usage and activity, you then allow a lot of new capital, new users to come to the space, and it's really what fuels adoption, really what fuels trial and error. You start to see some of the maybe cracks form in platforms, they patch those, they innovate, they develop beyond that. And I think that's what we're really looking to see at the later stages, which is really that flywheel of more and more people entering the space, more and more people spending time in the space. But we're really encouraged to see some of the early data points that we have from operating metrics within our companies. And I think we have the capital. There are many late-stage investors who have the capital that have been somewhat waiting on the sidelines, but are very encouraged and excited to get back into investment mode. But in the meantime, we're spending a lot of time with our portfolio companies. So different perspective, but all together, definitely optimistic and hopeful that we see this through to the next phase.
Yeah, I love it. Thank you. So basically from what I'm hearing, like there is no negative sentiment. So everyone's seeing good traction and everything is very positive on the overall trend, although there may be a decrease quarter to quarter on year, the overall trend is still positive. So yeah, it's great to hear that you do have a positive sentiment on the investment side. Now moving on to our next question. So what I also wanted to talk about is if we go a little bit deeper into detail as to what the investment companies are looking at currently in terms of technology trends and innovation trends. So I wanted to ask you what excites you the most in the projects that you're looking at, in new technologies, in new innovative approaches, and to make it more challenging. I would ask you to refrain from using the buzzwords like L2s, zero knowledge proofs, AI. So anything that doesn't fall into those buzzword categories would be interesting. Do you want to start, Alan?
Yeah, so I will start with a zero knowledge proof.
Of course.
It's actually, there's a lot of stuff going on with these protocols. Particularly, we see a lot of activity on Starknet. And it's a very promising technology, particularly around identity management. It's not the only technology that is needed to solve some of the issues of privacy, single sign-on, and so on. But it's definitely a technology which is showing a lot of promises. So that's quite exciting. Actually, we have a portfolio company in that space called Sysmo, which is using zero knowledge to enable the portability of your identity credentials across multiple applications, but only specific pieces of identity for specific apps. So it's one of the solutions that are out there to solve that big problem. So I think that is perhaps the biggest problem to be solved today in our world is the one of identity compliance, single sign-ons, and so on, which is affecting the user experience often negatively, and there's a lot of activity being deployed to solve that problem, and that problem will be solved through different angles. We also have a company in the portfolio called Ethermail, which is solving the single sign-on through a Web3 email protocol. So getting quite excited about that. NFT is still very much there I would call it a more mature stage. We're seeing real-world asset tokenization happening every day, including wine, which is a subject I'm passionate about. And we're seeing also in gaming much more sophistication about NFT, but also it's becoming, widespread, and in the luxury industry, it's no longer such a mysterious concept. So very interesting there. And then the one other area which is more infrastructure related is the modularization of blockchains. So the ability to use different parts of the blockchain for different use cases around data repository or exchange of data and so on. So that is an infrastructure thing that also needs to happen, and we're seeing some interesting stuff in that space as well. That's just a few. There are many others.
Thanks very much. So it's basically real-world assets, digital identities, NFTs, and modular blockchain. That's like the key topics that you're currently interested in, to name a few. Okay, Jocelyn, what's your take on that?
Yeah, so we're broad investors. We invest across crypto, and also we actually do fintech as well, because we see a lot of emerging overlap between the two. But I would say what we generally look for is strong founders, first and foremost, but also it's solving a problem, or like a real problem for real people is also something we look for. It sounds simple when you say it, but it is like something that we are really clear about. So 3 themes that fall in that category. One is real-world assets, as Alain mentioned. Right now it's like 1% less of TVL and DeFi, so there's a long way to go. The real world is, the world. So we think there's a really long way to go there. We have been encouraged by seeing more and more layers of the stack being built. We've seen things like data terminals. We've seen oracles being built for real-world assets. So we think that it's still quite early, but it is encouraging to be able to have that infrastructure scaffolding being built. Hard to talk about real-world assets without talking about, of course, regulatory. It is critical that it is treated in the right way, and frankly, we have shied away from a lot of the real-world asset protocols projects in the U.S., given I'm sure we'll talk about this again, but given some of the recent developments there. But we look especially to other jurisdictions where the regulatory is more favorable to tokenization. Another one, I feel like it's fallen a little bit out of favor, is stable coins. I think we still are very interested in stable coins as a use case, especially for things like cross-border payments, for remittances, especially in emerging markets where there's high inflation, hard to get access to dollars, high levels of currency instability. We think things like USDC, stable coins are just a great rail for being able to transfer value cross borders. One stat I learned recently, which is interesting, is Bitso, which is a Latin American crypto exchange. So, pure crypto actually apparently does 6% of the U.S. to Mexico remittance market, right? So, right, because it's so much cheaper. It's obviously not what their core business. It's not what they initially set out to target, but it is an obvious use case for crypto. So we think that's going to continue, especially as the regulatory environment gets a little bit clearer. And then the third is just in general better UX for crypto. I mean, if you go and stake on Yearn, it takes 9 steps. So we're looking at things that are more like one click, more single sign-on, more account abstraction, everything to make the crypto user's life easier, because quite frankly, we'll never get real-world adoption or mass adoption without making the process a lot easier.
Right, cool. So let me sum it up. So basically, you're looking at use cases that would be easy to use. You want to abstract the friction of blockchain, similarly how we abstract the TCP/IP infrastructure when we use the internet, and stablecoins. That's what interests you. Okay, and real-world assets, of course. Okay, and Neil, what's your take on that?
So I'll talk about this in 2 segments, mostly because the world and the universe of opportunities for us to invest in is relatively finite but growing, and we expect to grow on a go-forward basis. So I'll tell you where I'm spending time, and then I'll tell you what else I'm excited about. So where I'm spending a lot of time is on the regulatory clarity side of things. I have a business that we've invested in called Elliptic. They provide crypto compliance solutions, and the traction they've had is just incredible, right? I think you do need infrastructure businesses in this space to basically work with the large traditional financial institutions, to work with the regulators, and give everyone a good sense of comfort that actually crypto is safe to use. There is a pathway to us adopting crypto and Web3 in a very safe way. And that's what regulators are really here for, right? So it's spending a lot of time there with portfolio companies, particularly them, to help them expand in different geographies. Part of it's education, part of it's demonstrating that actually we've got the tooling already to really allow you to trust in this ecosystem and say, listen, we have relative transparency with blockchain. Here's how you actually benefit from aggregating and cleaning up and actually demonstrating what this data is showing you. Beyond that, some of the areas I'm really excited about, but are probably a little bit too early for the Vision Fund to invest in. One, actually just building on what you were talking about, Alain, which is modular blockchain. I think there are a handful of Web 2 businesses that are now businesses with Web 2 ideas, tailoring those ideas for Web 3. I ran into a friend of mine, Vineet, here at Smoothie. So if you think about Product Hunt, G2, you have a lot of developer tools. And if you think about developer tooling in this space, it was initially a more developer-friendly layer 1, and then a handful of layer 2 and other topics around that. But if you think about modular blockchain, you think about actually the various components that go into that modular blockchain. I think there are a lot of tooling platforms out there that are actually really sensible to be built and are being built in this space. I think the second part of that I think is really exciting, actually building what you were saying, Jocelyn, real-world use cases. NFT ticketing solves a scalping problem. That's a great use case. There's a handful of these businesses. But actually, what it does that's really great is it abstracts away everything blockchain about it, right? I think it leverages some of the technology, but the end user doesn't really need to care about what they're using. I think it has to be a good experience, has to serve its purpose, and maybe there's a feel-good effect that that money's going to the right place, royalties are going to the right place. Another great project here in Europe, raised quite successfully, LimeWire, right? And so part of the LimeWire story is you can just create a great Web 2 looking product in Web 3 and have high quality people, quality talent, quality interface, quality user experience, hopefully one day soon. And I think that's what's really exciting as the next frontier for us. When we think about where we invest, we're investing in platforms. Most of our platforms historically have been B2C platforms with millions or billions of users. It's got to be something where people don't have friction to the sign-on, friction to the adoption, friction to usage, but actually just a very pleasant experience that's ultimately more efficient, more effective, maybe better for everyone, again, if royalties are going to the right place and so on and so forth. Those are some of the areas that I'm monitoring. Again, a little bit too early for us to spend real time and real money just yet, but I think they're very, very exciting innovations to come.
Right.
I guess, Paul, what you're hearing is that there's still a lot of work being done on infrastructure. So this is still a very, very young industry or technology, and I think the wider public does not necessarily see that. And it's all sort of this thing about crypto and trust in crypto and so on, and the mixing, obviously, they being, so I'm talking about the layman mixes the sort of cryptocurrency with all the work that we're talking about here, which is about creating effectively decentralized data networks that is applied to multiple industries. So it's beautiful to see that there's a lot of infrastructure work being done across very big industries that we use every day: financial services, gaming, entertainment, media, and so on. So I find it's extremely positive to see this level of activity to create these building blocks for this new wave of technology.
Yeah, I love it. I would follow up here just by saying that the things that you guys are kind of focusing on is focused on technology, and you were speaking about the decentralization, and on the other hand, we're talking about having real use case for users. And the thing here is that decentralization as such is not a use case for a user. Decentralization is a solution for a particular problem, right? For example, if you're decentralizing your network to avoid hacking, then your use case is unhackable something. If you're decentralizing a social app to avoid the risk of being deplatformed, the use case of having an account and not being able to be deplatformed. So my next question is, how do we bring all those terms and concepts and primitives and turn them into use cases? So the simplest question is how we turn decentralization concept into real use cases that people can understand and use. What do you think, guys?
I'll happy to kick off and break up the order a little bit here. But I think, look, for me, it really comes down to abstracting away some of those concepts and really focusing on front end and what the use case is. And I think the first set of use cases, or the first set of tooling that people really got behind in the most recent wave, let's say, the AMMs, various other aspects of DeFi, they're exciting. Then there were a lot of copycats, which makes sense. A lot of people building improvements, big improvements, small improvements, variations on different layer ones, layer twos, and so on and so forth. But I think what I would really encourage people to start thinking about is, everything else that we could be using this technology for, and just what makes a lot of sense on the back end might be Web3, crypto related, blockchain related, but actually on the front end, most people, if you look at an iPad, it just abstracts all the complexity away. And I think what people really care about is their day-to-day functions, activities, the apps they're using in their life, and so on and so forth. Nobody needs to know what's in the back end. And I think a lot of these concepts really just need to be thought about in that construct. It really is not the prime topic, like you're saying. I think it's a very key component to what is being built and how it's being built. But ultimately, to get the mass market, mass users into this domain, you really do need to start thinking about what that front end looks like, what people are using.
I think it also emphasizing, what it is, the value that the blockchain rails bring, right? Like as I was saying earlier, for remittances, people aren't using Bitso because they want to, buy ETH and send it to their friend in Mexico. They're using it because they want to send money to their friend in Mexico, and it turns out that, or their family, and it turns out that, there's been studies shown that if you send remittances cross-border, it's 90% cheaper, right? So that's the key reason why people are using it in this case, is because it's cheaper, it's faster. So emphasizing those parts of the benefit rather than, as you say, decentralization for decentralization's sake is helpful. And I think as there's more and more use cases in Web3, trying to figure out exactly what it is the benefit of the technology is other than decentralization. So for example, we recently invested in a decentralized social network, which is called Niche Protocol. It's Web2 in the front, so you don't know that you're interacting with crypto, but it works on crypto rails. And why, right? Why bother? And the answer is because if you think about, Facebook groups at the moment, Facebook is, first of all, reliant on Facebook, Meta. So it could be deplatformed at any moment, but also groups have pretty limited functionality, right? You can't like issue your own token, you can't set your own rules for voting, you couldn't pay your group moderator if you wanted to according to how they contribute. And these are all things that obviously crypto rails allow you to do. And so there we actually see a really valid use case for crypto rails. However, to get people on board to a social network, you can't really be like, hey, and mint your NFT and you create a wallet. So this is why we think it's Web 2 in the front end, but actually it has the benefit of Web 3 technology to help manage groups more appropriately.
I think it will take time because, of course, the UI, the UX, is essential to explain, without explaining where the benefits are. But I think we are being helped a little bit by the fact that the internet has an inherent trust problem. We don't know who we are really interacting with when we are on Twitter, when we are on Facebook, when we're sending money and so on. So we have a problem of centralization. So somehow, the more people realize, and realize often in a negative way, like an FTX collapse is a negative way of realizing that a centralized entity is actually not so great. Is not so great that you have all your data being used by Facebook and so on. Once people start to realize that there are alternative technologies that really are based on these decentralized data networks, then we will start to see more, let's say, public understanding. But it's challenging because we're talking about technology and the wider public doesn't understand technology. It's difficult to convey these concepts. But essentially, it's more like a philosophy that needs to be somehow explained in simple terms to the wider public of the benefits of this technology, which is effectively the blockchain technology, to create these decentralizations of transactions, of social interactions, sending money, and so on and so forth. Actually, my good friend Michael Jackson was on the panel yesterday talking about his years at Skype, which has this, effectively, was this idea of using some form of decentralization for people to communicate with each other. And it was like a precursor to this idea of basically breaking the monopolies of AT&Ts and British Telecom and so on and so forth. And we're getting there slowly, but I think it's still going to take time.
I completely agree with you. I think the encouraging thing is that you still have a lot of people haven't forgotten about this space in the bear market. They're actually still quite active. And so I think what's quite encouraging is, we're investors in Consensus. MetaMask still has about 20 million monthly active users. And they're still active now, right? I think that's fallen from its peak, of course, activity. But I think there's still activity. The number of wallets are growing. The number of users still growing. And I think having more and more of these kinds of businesses that you guys described in both aspects is not just increasing awareness, like you talked about, but actually just getting people to move or migrate a little bit into this space. I do see, however, a bit of the world's merging, though. I'd be curious for your thoughts, but I think I do see Web 2, Web 3 coming together, more and more Web 2, traditional finance businesses, really, TradFi businesses, really just spending time in this space. They've hired big teams, they have a lot of firepower behind them, and they're looking to adopt some of the positives of this entire technology space. There have been a lot of great innovations, but I do see a lot of people spending time there. Do you see things sort of bifurcating, staying apart,
sure.
sort of merging together?
Yeah, just simply by things like on and off ramping technologies or applications, they're becoming sort of more mainstream, like Ramp and others. We are seeing obviously in the money remittance, money transfer business, a lot of institutions being actually jumping on the bandwagon, and we backed a company recently called Numias, which is effectively creating an e-bureau for the Web3, using basically the blockchain to transfer money more efficiently, more cheaply, more quickly, which is kind of counterintuitive because people say, well, actually the blockchain is slow and so on. But it's using it in a different way to solve a problem of, again, centralization and a problem of rentier economy by the banks, by the social media companies and so on. So yeah, we're seeing it more and more. I mentioned Ethermail earlier, but it's essentially creating an email address from your Ethereum address and bridging the sort of Web 2 world of email to Web 3. and then getting into the single sign-on using your email. That's again a way of bringing the wider public into Web3 without really knowing they're getting into Web3, because there is some value in what they're seeing. So yeah, I agree with that.
I think that's incredible. I think the remittance use case you guys both talked about in particular, it really just forces change, or encourages change rather, because when you have a solution that is that much cheaper, that much faster, that much easier to move money across borders and so on and so forth, it forces people, and you're talking about the fintechs you've started up in the last couple of decades, but I think it forces people to say, well, actually, a lot of our current systems are using 20, 30, 40-year-old technology to run big businesses that we know, love, and use today. But actually, this step change and improvement in costs sometimes, and speed and experience, that's really what I agree with you. I think that's exactly what we need to start to see people move more and more into this space, whether or not they realize it.
I think maybe to be a little bit controversial, the one part I might disagree with you a little bit is when you said that, if you explain the philosophy of decentralization to people, they'll get it and they'll make the switch. I'm paraphrasing, I think probably quite bluntly here. I think that works out slowly, right? Because, decentralization, like in theory, we like it, trustlessness, like, we like it in theory, but then something else pops up, and like most people actually are not going to make a big effort, quite frankly. Like my mother is never going to stop watching videos on YouTube because it's owned by a giant. Sorry, So I do think that as much as you can explain, it really requires a much better alternative to actually force adoption, and then it's one of those things that will come slowly, and then hopefully with a much better alternative, it'll come quickly. But I think the explanation in itself is only going to attract a limited number of people.
Right. Funny enough, speaking about the use cases of money transfers, I just realized that in the US we've got planes that fly like paper checks from one city to another. And once you've explained it to a person who've just sent their USDC or USDT or whatsoever from one MetaMask to another MetaMask, and you compare it to this plane that actually flies with paper to transfer the money, it's fantastic, and that's mind-changing. And speaking about people still paying attention to the industry and even getting more attention to the industry, let's speak about regulation a little bit. And I wanted to ask you, how in your companies do you address the regulation issue, and which scenarios are you actually modeling for your portfolio companies and for your funds as a response to the current developments? And do you actually think that you can affect and influence and drive the change in regulation, like from the business side?
Yeah, I think it's the duty of particularly Web3 funds that are very much in the ecosystem and seeing very, very different companies to help the regulator, or in our case in Europe, the European Commission, or the EBA, which is the Association of European Banks, which is very powerful, to understand this technology, to understand the benefits of this technology, and particularly not try and use existing regulations to regulate the new stuff. And this is the tendency that these institutions have in Europe, and I won't speak for the US because you guys are better qualified for US and Canada, but for Europe I can see that they are trying to fit the crypto regulation within existing frameworks. So there's something called MiCA which came out, which is actually very positive, and if you compare to at least the US, it's very positive for the industry. It regulates it in the crypto and the issuance of crypto and the management of wallets and so on in a way that is fair, I would say. And it still needs to be worked out. So we are actually active participants to these forums in Brussels to influence the regulator. And believe me, you can influence the regulator. It's not so much influence. We're not talking about lobbying here. It's to explain the benefits and actually go with the regulator, but make sure that they understand why certain things are happening in certain ways around crypto, because they just don't know. They're very knowledgeable people. They are very competent, but they don't see these companies that are using crypto to solve real-world problems for money exchange, for B2B transactions, for cross-border, and so on. So it's our role to be active.
Right, so not only we need to educate our end users how to transfer money or whatnot, we also have to educate the regulation how to control the whole thing or not control. That's your take.
Yeah, I mean, we need regulation, and there's no doubt about it. But we don't need stupid regulation. We need fair, good, protective regulation, but not stupid ones.
Yeah, great. Jocelyn, do you have a take on that?
Yeah, I mean, in the US, we are trying to do what we can. So DCG has a full-time policy person. We're on the board of the Blockchain Association, which is a cross-industry lobby group. And I think, we view it as critical, obviously, that we engage with the regulators. I think regulators care. I mean, politicians, rather, who are the ones that regulators are appointed by, care about being reelected. I mean, they care about jobs in their districts. So I think, explaining to them like the broader use case is all well and great, but we also try to also pinpoint like specific examples of how we've helped in their districts. So for example, one of the DCG companies, Foundry, is based in Rochester, New York, and has brought hundreds of jobs to Rochester, New York, which, if you've ever been there, is not known as the biggest metropolis in the U.S. So really, and maybe not coincidentally, the senator for New York is therefore a fan of crypto and has been pushing forward as a result. He's a very positive voice for crypto in the Senate, and so I think it's kind of speaking to regulators and politicians, engaging with them, but in a language that they understand and appreciate as well. Like every industry, right? This is not unique to crypto. So that's what we're doing in the U.S. But quite frankly, we're not super optimistic about what is happening in the U.S. at the moment. Hard to argue that, aside from this is the bottom and we're only up from here. That it's hard to argue to be optimistic in the U.S. We are more encouraged by other jurisdictions. So Hong Kong has made significant strides, as we were talking about yesterday, in regulatory in the Middle East. We just made an investment in Brazil, which is actually quite forward-thinking in tokenization as well. They actually granted a payments license to, again, Bitso, to a crypto company, so that's been encouraging. In the UK, the FCA has granted a second license recently. I think one to Interactive Investors, second to Bitstamp. So, we do see activity happening on the regulatory front outside the US that we're encouraged by. In the US, we're just trying to engage where we can to help improve.
I think I'd echo a lot of what's been said. I think regulation is required, primarily because it gives everybody a lot of comfort to sort of start to enter the space. If it's an individual, if it's a business, it's the same thing, right? You basically have some level of comfort, some level of trust in the ecosystem because there's some framework that you can see people are trying to do the right thing or being encouraged to do the right thing and penalized if they're not doing the right thing. And I think that the origins of this space were intertwined with a lot of negative stories, negative sentiment. A lot of stuff has happened and continues to happen. We keep seeing, the U.S. has a sanctions list, other countries have sanctions lists. They're updated regularly, and there are a lot of tooling. There's a lot of tooling and a lot of toolkits out there available for real businesses, crypto businesses to adopt. Compliance procedures really in adherence with some of the regulation that exists there. I think what's quite encouraging is that the regulation, it has been there for years, right? It's absolutely, there have been frameworks for years, some rules put in for years, but I think what's encouraging, particularly to what you're saying, is that a lot of this has evolved in a very healthy way. I think a lot of regulators are spending a lot of time in this space. They have gotten up to speed. They continue to get more and more up to speed. They're really inviting a lot of people to come in and participate in some of these forums to sort of say, listen, here's how Web3 is shaping up currently. Here are some of the latest trends. Here's what you need to stay on top of. And I think a lot of the regulations actually being tailored for this space. And I'll talk away from maybe Europe and the US a little bit and say, look, we spend quite a bit of time in the Middle East as a fund. We've got a lot of our backing from that region. And we have a couple of portfolio companies out there. And we have a lot of crypto companies that actually, some of them relocated and so on. I think when you see people setting up a specific virtual asset regulatory authority, as was the case in Dubai, Abu Dhabi, the ADGM, spending a lot of time in this space, inviting a lot of people to come into the country in Web3, giving out licenses left, right, and center to appropriate young and mature businesses in the space. That's all quite encouraging, right? I think they're not here to, as far as I understand, they're not here to stifle innovation, cut anything off of the knees. In a lot of the cases, it's really just to make sure that everybody's on the same page about what everybody's trying to achieve in this space, in all the many different dimensions that it takes place, and give everyone some level of comfort that there is some framework, there is a lot of thought that goes into what's going on here. We don't seek to influence or shape or lobby or anything in this space by any means. And we don't model, to your question, we don't model any regulatory scenarios. But I think what's encouraging for me and later stage investors as well is to see that this takes place, see that these frameworks exist. When we speak to companies, understand how they're adhering to all the policies that they're required to adhere to on an increasing basis. And then from there say, listen, just like we would invest in a bank or a fintech in any other part of the world, we're doing the same checks, we're making sure that people are following the same level of governance and policies and procedures, and then we're comfortable to invest much more capital, right? I mean, we've invested about $2 billion into crypto businesses in the last 3-4 years. That's a lot of capital, unfortunately a very small fraction of our total fund size. And I think maybe that increases over time, but that only comes about with more and more people believing that this is a very trustworthy space, trustworthy set of technologies. It's not riddled with the issues that existed in the past. And I think all that's really headed in the right direction. So we're quite encouraged, and it's absolutely a lot of thought going into it, a lot of progress made on both the regulator and the private side.
Okay. Thank you for that. So basically, the way you look at the regulation space is that we do realize that we do need regulation, similarly how mobile networks are regulated and internet is regulated, and as a general concept in most of the countries. So similarly, we will have Web3 regulated. It's just the question is how much time it will take to get to a regulation that will make it comfortable for the investors to invest, for users to trust their money to all those products, and so on and so on. So thank you very much for that. We have some time left. Maybe what I wanted to do is ask you to do a very quick take on like how we as an overall community of investors, users, philosophers, tech guys, developers, and so on, how do we rebuild trust in the industry? The trust that has been jeopardized by all the scams and by all the hacks and so on. So what can we do like in our everyday life, in our jobs, to make sure that Web3 moves faster into the prosperity? Maybe just a very quick take, like a minute or so.
I'll give you a one-sentence take from my side. And I didn't come up with this by any means, but I think one of the best phrases I've heard on this, and makes complete sense to me, is trust is consistency over time. You can't underestimate the time part, you can't speed up too much of it, a little bit of that seems a bit artificial, but really being really focused on what you're building, keep at it, head down, keep going in the same direction, do the right thing, of course, but trust is consistency over time, absolutely.
I think one of the amazing things about crypto is that, it's on chain, it's all visible to everybody, right? So like utilize that, put things on chain, direct investors to where you can find things on chain. I mean, I think one of my aha moments with crypto is I actually used to be an impact investor, and I spent a lot of time, trying to figure out like monitoring evaluation, what was your impact, like hiring consultants, field trips, etc. And then, one day I went to the Goldfinch dashboard, and I was like, oh, they have this real-time, updated. They're not hiring anybody to do this. They just actually have it. This is going to just erase the whole M&E industry, which is a great thing. And so I think really leverage this part of everything being on chain to make it as visible as possible.
Yeah, I think it's an everyday work to do that. Fortunately, a lot of the applications that are being developed and that we are all investing in somehow are not 100% anymore about Web3. There is more and more overlaps. And I think the trust element is being built over time by having these technologies that are embedded into everyday life. We talked about NFTs before. That's a clear example. You will see some money transfer being done using stable coins, but you don't see the stable coins, necessarily. So the applicability of the technology would be basically invisible So I think this overlap with the real world, the things that we do every day, whether it's social media, whether it's financial services, or other aspects of everyday life, where the technology is being used, this is where you see, the trust element would be built, and it's happening. It's an everyday thing.
All right, that was a great wrap up, and thanks very much, guys. It was very insightful. Thanks very much for all your inputs into the discussion. It was a pleasure.
Thank you.
Thank you very much.
Thanks.